Something unusual just happened, and if you blinked, you missed it. A single signal, a subtle move, no headlines, no mainstream alerts, but insiders noticed. Because when Jake Claver speaks quietly, markets tend to move loudly later. And today, that quiet signal may have just pointed to one of the most explosive XRP setups we've seen in years. Welcome back to XRP Insider Network. This is the channel where signals get decoded, narratives get exposed, and hidden market mechanics are brought into the light. If you value being early instead of emotional, make sure you're subscribed and notifications are turned on so you never miss what the crowd only understands later. Now let's talk about what just happened, because this isn't hype and it isn't random. Jake Claver didn't tweet XRP to the moon. He didn't post price targets. He didn't shill. Instead, he did something far more important. He referenced alignment, alignment between liquidity cycles, regulatory posture, and institutional readiness. That one word, alignment, isn't for retail, it's for funds. And when someone with Claver's network and access uses that word publicly, it's rarely accidental. Here's why this matters. For nearly 3 years, XRP has existed in a compression zone, price suppressed, volatility muted, sentiment divided. But under the surface, infrastructure kept building. Banks integrated quietly. Payment corridors expanded. On-demand liquidity volumes grew, all while price stayed boring. That's not weakness, that's absorption. Jake's signal came at the exact moment several long-term XRP technical structures completed their final tightening phase. Weekly Bollinger Bands are at their narrowest point since 2017. On-chain dormancy metrics show long-held XRP waking up, not selling, but moving into strategic wallets. And derivatives data shows leverage flushing out late shorts. This is the same setup that preceded every historical XRP expansion cycle. But this time, there's something different. Back then, XRP was fighting uncertainty. Now it's emerging from it. The legal overhang that once froze institutions has shifted into regulatory clarity. Not full clarity, but enough for banks and funds to finally model risk accurately. And Jake knows this. His entire analytical framework is built around capital behavior, not chart patterns alone. So when he subtly references alignment, he's signaling that multiple independent systems are finally pointing in the same direction. That's rare, and that's powerful. Let's talk timing. Markets don't move when news breaks, they move when positioning completes. And positioning in XRP has quietly shifted from distribution to accumulation. You can see it in wallet clustering, you can see it in declining exchange balances, you can see it in OTC desk activity. Retail isn't buying aggressively yet, that's key. Breakouts don't begin with excitement, they begin with silence. Jake's signal wasn't meant to excite you. It was meant to alert those watching closely that the silence may be ending. And here's the psychological trap most people fall into. They think XRP needs hype to move. It doesn't. It needs liquidity pathways activated. And those pathways are built by institutions that move months before price reflects it. This is where XRP differs from nearly every other crypto asset. It's not designed to pump, it's designed to function. And when function becomes necessary, price follows violently. That's why XRP rallies historically don't stair step, they gap. They don't grind up slowly, they reprice. And those repricings always catch people off guard. Jake's timing suggests we're approaching one of those moments again. Not tomorrow, not guaranteed, but statistically, structurally, and behaviorally, the conditions are lining up. Now ask yourself this. Why would someone with access to institutional sentiment signal publicly before price moves? Because the signal isn't for you. It's confirmation for others already positioned. It's a way of saying, yes, what you're seeing, we're seeing too. That's how consensus forms at the top level. And when that happens, liquidity floods in fast. Before we continue, if you're finding value in this breakdown, take a second to like the video and subscribe. Not because we chase hype here, but because staying informed early is the only real edge retail ever gets. Now in the next block, we're going to connect Jake's signal to the macro environment, the XRP ledger's evolving role, and why this breakout, if it happens, won't look anything like the last ones. Stay with me, because this is where it gets serious. To understand the real weight behind Jake Claver's signal, you have to zoom out, way out, because XRP doesn't move in isolation. It moves when the system around it breaks or needs repair. Right now, global liquidity is fracturing. Cross-border payments are slower than political promises. Settlement risk is rising, and correspondent banking is quietly collapsing in emerging markets. This is the environment XRP was built for. And this is where Ripple has spent years positioning itself not for retail adoption, but for institutional necessity. Jake's signal came just days after multiple international payment corridors reported record transaction throughput using XRP powered rails, not marketing numbers, operational numbers. That distinction matters because utility driven volume doesn't chase candles, it creates floors. And when speculative demand finally arrives, those floors turn into launch pads. Here's what most people miss. XRP doesn't need everyone to believe. It needs a few large players to require it. That's it. And when regulatory uncertainty begins to fade, requirement replaces hesitation. Jake has consistently pointed out that the next crypto cycle won't be retail led, it will be balance sheet led. That means assets with real world integration will outperform narratives. And XRP sits at the center of that thesis. Now let's talk about the technical trigger. There's a long-term descending resistance line that XRP has respected for over 2,200 days. Every touch resulted in rejection until now. Volume is building beneath that line without price rejection. That's absorption. And absorption at resistance is one of the strongest breakout precursors in market structure theory. Jake didn't mention charts directly, but his timing aligns perfectly with this structural pressure point. Coincidence? Highly unlikely, especially when you consider that funding rates remain neutral, meaning no overcrowded longs. That's fuel waiting to ignite. And here's the part that should really make you pause. Major XRP wallet activity is increasing during low volatility sessions. That means accumulation is happening when nobody's watching. That's not retail behavior, that's strategic. When price finally moves, it won't ask for permission, it won't wait for headlines. It will reprice into thin liquidity and leave disbelief behind it. That's how XRP has always moved. Fast, violent, unforgiving to late entries. Jake Claver understands this psychology deeply. His signal wasn't excitement, it was preparation. And preparation always comes before expansion. But let's be clear, this is not guaranteed. Markets don't owe anyone profits, and XRP has disappointed before. That's why this moment feels different. Not because of hope, but because of convergence, technical compression, regulatory relief, infrastructure maturity, institutional readiness, all converging at once. That doesn't happen often. And when it does, price tends to move farther than anyone expects. Now imagine this scenario. XRP breaks its long-term resistance. Algorithms flip bias. Funds rebalance exposure. Retail notices late. By the time mainstream media runs headlines, the move is already extended. That's how asymmetry works. Jake's signal wasn't telling you to chase, it was telling you to pay attention, because attention precedes opportunity and ignorance guarantees regret. If you're still here, you're already ahead of most. That's why channels like XRP Insider Network exist, to decode signals before they turn into stories. If this breakout happens, it won't just be another pump. It will be a repricing based on years of suppressed valuation. And those moves don't retrace politely. They shock. They reset narratives. They force people to ask, how did we miss this? The answer is always the same. The signals were there, but they weren't loud. Jake Claver didn't shout, he whispered. And in markets, whispers from the right people matter more than screams from the crowd. Stay sharp, stay patient, and remember, breakouts don't announce themselves. They reveal who is paying attention.